Greetings, traders. This is Mohan here, and I'm glad you joined me for the second part of the webinar that I'm doing here, which is going to go into a little more detail about boomerang day trading and how it works for traders around the world who have had great success with our system. First of all, before we get started, I wanted to bring in our usual disclaimer here and let you know that past performance is not indicative of future results in trading. Futures and options trading involves substantial risk of loss and is not suitable for all investors. Just remember these rules. Only trade with risk capital that you can afford to lose. That's part of the game in trading, is you have to lose some trades as well as win some. Before we get started, I wanted to mention to you that Boomerang Day Trader is a really exclusive system that I developed after a year of research. Now, I've been trading for over 20 years, so I spent most of 2011 researching the system to put together the precision elements that I'm going to show you in detail today. Now, if you watched our first seminar that's here on the blog, you saw a very clear explanation of all the different components. I'm going to go over those again real briefly because, well, the truth is that repetition is the mother of all learning, and especially in trading, you can never learn stuff and repeat it enough, because as you develop winning habits, you want those to really get anchored into your system so that you pretty much go to your screen every day and you're very excited to know that you're going to trade and you're going to win and you're going to make money, and if things get a little rough, you're going to know how to handle it. So let's get started. First of all, for those of you who saw the first webinar that I did over there on the blog, you remember the components are these. You've got, first of all, on the chart side, you've got the trade channels, which are signaled by these arrows here, and there's an alarm on there so you know when a new trade channel is opening. Running up through the trade channel is a signal line which colors the candles. Now, you don't need to learn candlestick charting to trade boomerang, but it certainly doesn't hurt if you become a little bit adept at understanding the principle, but it's not required at all. But this colors the candles. We use candlesticks on here, and we use a 450 tick chart. Now, over my year of research, I tested dozens of time configurations, and 450 ticks clearly, not just barely, but clearly came out the winner in all of the configurations I was doing. So you just got to trust me on this. Yes, Boomerang will work with other chart configurations and times. It'll work on all active day trading contracts, but you just have to realize that I spent a lot of time testing everything. So it wasn't just a random number that I picked out of my hat. So as this trade signal line moves through the trade channel, the bars or the candles are all colored according to the movement of this precision signal line, and this signal line is where we look to take trades off of as the prices pull back to that. Now you can see the signal line here. A new trade channel open, prices pulled back to the signal line, and another component of the chart is, this is more the methodology, is a dot appears instantly, a blue one on the buy side, a magenta on the sell side of the signal line with an alarm signal telling you that a trade can be entered. Now, another component of the chart side is these bias accelerator alerts. This is an industry first, and I explained this on the first webinar there. These tell you if they appear within 3 to 4 candles on either side of a new trade channel opening up, that the market can make a stronger move. This is an industry first, and it's a wonderful tool to have when you're trading, knowing that gives you more confidence to possibly hold out for a stronger move. Another component of the chart patterns is this red line here. When a signal line crosses over this, that's when a new trade channel is opened. You see that? When the rim of this trade channel crosses over there, we get a new trade channel. The signal line runs up through there. So as this red line crosses up over the second component, which is this orange line, that's our underlying bias line, one of the other confirming aspects, in addition to the trade bias accelerator, is when a red line crosses over the orange line, you get a bias move on that side. It's a very, very important signal, and I'll be showing you more about that shortly. So that's the components of the chart side. On the bias indicator side, you have bias indicator 1 here, and bias indicator 2 here. What we look for, first of all, when we get a matching signal in the chart pattern and a pullback to the signal line, we look to verify that these histograms are on the same side of the zero line on the bias indicator 1, either gray or green on the upside and gray or red on the downside, and a confirmation on bias indicator number 2. Once you see these matching, in this quick tap on the signal line, you can go long and you just track these to make sure they're moving higher. Now, the great feature of bias indicator number 2 is that it measures the move of the market. And you can see as prices move higher here, I'm going to shrink this just a little, we have the peaking point up here at the magenta line. Prices sometimes will trade through this, and these long thin bars will trade through that, and you can measure, which I'll show you shortly, how you can measure a move if you're going to take more of what's called an intraday swing trade move. Now, we've got one coming up here I'm going to show you in a second, but let me say this. First of all, remember, Boomerang Day Trader can be used on any active day trading contract, and the time frames are all just a little bit different. Obviously, the ones in the DAX are going to be different from the U.S. stock indexes. 6E trades around the clock. I'm using a 6E chart today because it trades around the clock, and I can show you these patterns occurring over and over. Listen, it doesn't matter what contract it is. The patterns occur over and over, and it really almost doesn't matter what contract you trade. A lot of people get really hung up, oh, I'm a crude trader, I'm a gold trader. Well, that's good, and it's good to specialize in 1 to 2, maybe 3 markets. But frankly, a chart is a chart is a chart. The patterns all look the same. And as long as you're on the right bias, the right side of those trades, you're going to make money, regardless of what the contract is. So I wanted you to understand that. The trading hours for the 6E, generally, unless you're an after-hours trader like I often do myself, for the regular trading hours are Eastern Standard Time, 8 to 2 o'clock p.m. Those are the best times to trade where the volume is the highest, and I'll be showing you a volume meter in a minute here too. The best times for the U.S. stock market are usually 10:10 to 2 o'clock. Usually after 2, things get a little bit shaky. You may not want to trade that market after that time. Yes, I know big moves occur and everything, but what often happens is that you see these hedge fund managers and mutual funds managers jumping on board with big positions on a quiet position, a quiet market. A lot of times you'll miss those markets or get whipsawed by them. So anyway, just we're day traders. We look to clip 8 ticks on a trade, maybe a little more if you get a bias accelerator alert and matching histograms on the Boomerang bias indicators. But generally, those are the best hours to trade for those markets. If you want to trade other markets, I'll show you how to use a volume meter to determine what the best hours are and determine if it's a good time to stay in that market. So let's move forward. Again, don't worry about the dates or the time frames or anything. These are constantly ongoing, repeating patterns on all contracts. So it doesn't matter that this is the euro dollar. It could be the U.S. stock index market. It could be the German DAX. It could be the British pound. It could be gold or crude oil. It really, really doesn't matter. So here's the basic method. Now that I've quickly explained the components again, and if you want more details on the components, just look at our other webinar on the blog here. What we look for is either a bias accelerator to reverse a move or a tap. If this channel between orange and red, this is very important, pay attention to this orange and red channel. If this is thin like it is here, a tap is all you need on the orange line. If you just get a tap on the orange line or a trade through the prices like here, it's slightly traded through, that's fine. You trade a move back to the pull back to the signal line. Now, the first 6 candles after the channel is open is going to have a alarmed and tap on the signal line is going to be marked. After 6 candles, there will not be a mark or an alarm on the signal line, but that doesn't mean you can't take a trade. Because like in this case, the new trade channel opened, but 6 candles went by, and there was no trade through or tap on the signal line, the orange line here, I'm sorry. So there wouldn't have been a trade, but that doesn't mean you can't, when you see this trade through, you can still take this tap right here on the signal line and down they came for 8 points. You had a bias accelerator alert, which was not 3 to 4 candles before, but it's still a valid signal. It's still telling you something's going on. And the best part is you had exact matching red colors at the time of the tap on the signal line on both bias indicators, which is a very powerful signal for a move, in this case to the downside, which did occur. It was a very strong move, as you can see. Now, another confirming thing is once the trade's moving, now by this point you'd already gotten your 8 ticks out of it, but with this brand new red crossing over the orange line, that tells you taking a second level trade is a very good idea. Now, in this case, one did not set up because the second level is usually where you'll get a counter green bar or two and then a resumption of the downside with a new trade channel opening. All that happened here was they went red, they moved up just slightly, and then continued lower. Anyway, that's an explanation of that. Look for, like, say, if we had this configuration right up in this area, then a new sell channel here, we could have taken a tap here on this signal line or lower and gotten a move. Now, another important thing here, watch the spread, as mentioned before, on this red and orange line. Make sure and watch this spread as it fattens up here. That's usually the end of the move. Not a sign to go long necessarily. You have to follow the rules to go long. But it is a sign that the market could be ready to change here. So, as we see, after the end of most big moves, you get a bunch of choppiness here. Now, one may say, well, look, there's the bias accelerator within 4 candles of the new trade channel. Yes, that's true. And had you taken this buy right here, you would have had a successful 8-tick trade, but it would have been a little bit choppy. You would have had to go through some changes here, especially with a reversal channel coming in and an arrow. It would have been a little confusing. So the best thing with a steep orange line, even if you have a bias accelerator alert, you can take those trades, but it's always a little better if you can wait for one of the candles to trade up to the orange line, then the tap on the signal line shown right here. This is, again, alarmed and marked, and up they go. Wonderful trade. Now, we would have not taken a trade in this time period because this is generally, it would have been okay, but it's running a little late in the session. I'm just showing you the chart pattern here. That's what's most important, is the fact that this chart pattern is there. So that gives you an idea. Now, as we roll, these are, again, after hours, but the patterns are the same. I'm just showing you that here's a bullish pattern coming in here. Now, this is ultra low volume here. These are after hours in the Eurodollar. They're relatively insignificant because of the volume is so low, the market's just flipping around here and there. In fact, before I go on and do that, let me go ahead and show you what a volume meter looks like on this contract. Just one quick second here and I'll set it up. Now, here's the volume meter I wanted to show you. This can be built easily. On my blog at boomerangtrader.com, we build a volume meter that looks like this. Now, the purpose of this is very important. It's part of the Boomerang system, and you can build it in about 3 or 4 minutes. It's very easy. Just bring up a new 1-minute chart on the contract you're trading, put in the 8-period volume moving average. It's all explained in the report. And then in the case of the 6E contract, what we do is we mark, this is the volume per 1-minute candle, and this is the average volume on an 8-period moving average. Now, I use 300 generally as an average on the 6E contract. I like to see the volume trading at least up near that. It doesn't necessarily have to be over that, but ideally if it's trading, up above 200 to 300 or higher, then that's a better move. And down here you watch for 50+ contracts trading, and then this is the ADX here, and there's another report there. You just go to boomerangtrader.com, resources, how to build a volume meter, and then there's another report on there that say, let's add ADX to the volume meter. If you see ADX, it explains in there what ADX is here, and you see the prices or the histograms trading over this pink line, this magenta line. That's generally a very good time to make these trades. This is nice volume here, and the market's going to be moving really well. So make sure and build this. You can put any contract in here, but this is the lifeblood of the markets, the volume. And it's going to show you exactly when you should be trading, and when it gets really low, when you should probably be standing aside, because like right here, average 56 contracts trading every 8 minutes. Let me find an even better period here. This is just to give you an example, coming in close of the U.S. stock market period. This is so low. 75 contracts is so low, and down here they're trading, you know, like just a few 5 to 10 contracts on each candle. It's a waste of time trading during that period because it's just not going to give you enough move. You're going to put a trade on, it's going to move a few ticks here, move a few ticks there. It's not going to be something you're going to want to try to trade and look for a regular trade within that. So check out this volume meter and let me know if you have any questions. It's very easy to use. So getting back to the markets here, I've taken some notes so I make sure and cover all the elements with you. We've done a review of all the elements for Boomerang. Before I move forward, I want to say this to you. Boomerang cost $11.95. It's a very low price. Sticking with my tradition, I keep my costs and my services very low. $11.95 is very low compared to most of the systems out there that they'll lease to you for $250 a month, and then when you cancel, you don't have any indicators or anything. Or if you buy a system, sometimes they run $3,000 to $5,000. Boomerang is $11.95. You own it for life with all upgrades or anything for the system. We have full support for it. If you want to add it to another computer, we can set you up with that. And the best part is what comes with it is free, is ongoing webinars like this one, video tutorials that I put out almost weekly. You can email me anytime with any questions that you have for free. That's part of our service when you buy Boomerang. We fully support you. If you're interested in a free tutorial, we have Matt here who will help you go through a free live trading tutorial before you purchase Boomerang. So you're absolutely sure it's for you. He'll show you all the details and show you some methods of that he uses similar to what I'm showing you here. And it's great. If you already own Boomerang and want a tutorial with him, well, it's just a small hourly fee that he charges for his expertise, and he's glad to do that as well. Just email me if you have any questions on that at mohan@Day Traders Action. So here's another example. You have the red line hovering below the orange line. The bias is really low. As I mentioned, this is an extremely low volume period. All of a sudden, the volume kicks up. You see the red line starts crossing back over orange, but mainly you have a new buy channel with a bias accelerator coming in here. This was a 5th candle in, but still it's a good sign that the prices are starting to move up. You've got the main thing too here is you got matching color biases, both green down here, a very good sign telling you to get long on one of these pullbacks when the first few taps on the signal line right here, and up they go. I'll just switch over to a cursor real quick. You right-click and you go to cursor and you go to crosshairs. This is what I usually use when I'm trading, because I'm always tracking where the prices are and then where they are over here on the right side, because that's what we're always watching. So you can see a tap in the signal line at 95. They ran all the way up to 27, a huge 30-tick move, all told in advance by the bias accelerator, the matching green bias histograms here. Now, here's a good example. This is not a trade. We have the brand new red crossing over the orange, and that would be fine if these red candles came down and traded through the orange line. This would be a sign of another trade on the downside. It'd be a reversal of this new red crossing over orange. Do you understand that? This is such an important bias feature here. Simple, but very important. So this is not a sell trade here. A second level buy, well, you have matching green again. This suggests the market's going to move up higher again. So you take the tap at the signal line at 28, they run up to 48. Another nice move. Now here's a pullback with some red candles and a third level move up. But if you remember from earlier, we do not take third level move trades. It's not part of our system. If you want to try to catch that, you're on your own. That's fine, but it's not part of the system. And there's a reason for that. Generally, the third level trades are a lot riskier. Yes, they can be powerful. In this case, was a powerful whipsaw up move, but a lot of times the market will reverse shortly after a second level move. You just want to patiently wait and see what happens. So we got up here, and now here was an amazing feature. You had a thick, wide spread here, a channeling spread, and then it fattened out here. So a second level widening spread, generally when that happens, you can go ahead and obey the rule of the bias accelerator matching the new trade channel, take the short here at 55, and they came down to 42. So that would have been a decent trade. If you wanted to follow our general rule, which is when you got a steep orange line, you do not want to trade against it. It's a judgment call, and you get really good at using Boomerang Day Trader. You become expert at it, and you'll know what to do. The reason I'm giving you this hint is very important. You have a second level widening channel. That is an extreme extended move. Usually that first pullback is going to work, even though it's against a steep orange line. Now, the rules aren't contradictory. I'm just giving you an extra hint of where, if you want to do it. You're in this battle of trading. I'm giving you the best tools as your field commander here, how to handle a trade like this. If you want to wait, then go ahead and wait. For the price, the normal rule is for price to trade through the orange line. Now, what happened here instead, and these patterns repeat over and over, it was correct to go short here. It was a hard, fast move, so you got your 8 ticks real fast. Quite a pleasant type of trade when you get these. You sit in here a couple minutes and kablam, there's your gain. What it created, though, and this is one of our rules, 3 7-tick candles, spike candles in a row, that's going to create what's called a fat channel. And 90%, 85 to 90% of the time, these fat channels are going to reverse. Here's one here. I call them fat channels. And do not ever trade at the bottom or top of fat channel. You're going to get stopped out right away. It's not part of the rules. You've got to get these early taps in the signal line. When the channel's wide like this, stay out unless you've got another configuration that's in line with our rules. Well, sure enough, even though price is traded through here, this pattern was already over. You're now just sitting aside waiting to see what happens. Well, of course it reversed. Now you're wondering, am I going to get a buy signal off of this? Because you do have prices coming back up to the orange line and tapping the signal line at the top of another mini fat channel up here. Well, this is just typical of what happens after a long extended move. The market just tends to get all, whipsaw oriented towards the end of these moves. It's a typical repeating pattern. It's not surprising or shocking or anything, or it shouldn't shock you. You just learn how to trade. You learn how these markets work, and it'll be the same old routine, which is a good thing. That's what you want. Anyway, the market now, red has crossed over orange again, so you've got this pattern here. Same thing, spiking candles to the downside. This is just whipsaw moves occurring at close to the top of the market. So you don't want to trade this action. Finally, the candle's traded down here, but again, you're down at the bottom of the fat channel. It's one of our rules on our rules sheet. Now, quick note, jump aside here. Let me bring that in here. This is our rules sheet. Now, notice it's not 20 pages long or 5 pages or even 3 pages. It's 2 simple pages in length. Shows you the simple rules. Now, we send this out to traders after they purchase Boomerang Day Trader. However, if you're listening to this webinar today and you're extremely interested in Boomerang Day Trader, just go ahead and send me an email at mohan@daytradersaction.com, and I'll send you this rules sheet right over. This will tell you the exact rules that we use, and we give to traders to memorize. You can print this out, put it right in your desk, follow through on this webinar with me, and you'll know the exact rules, and you'll see it. So once you download it and purchase Boomerang Day Trader, you'll say, boy, there's no surprises here. It's exactly as he showed me on the webinars and the video tutorials. I already know the rules and have memorized. This is going to be a piece of cake. I'm opening up my new Boomerang Day Trader, which was formerly called Boomerang Currency Trader. It's the same exact thing. I just changed the name because so many traders use it on all these active day trading contracts. I just changed the name. No big deal. These rules are so simple, and I've just showed you most of them. You can have the rule sheet in front of you, watch these webinars, and see it all come and materialize right before your eyes. Let me show you another one. Here's a classic example of a topping market here. Up, 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 but it's just bullish. It's not going to let go. So you got matching green bias indicator. This is usually a very good sign of a market that is continuing to be bullish. Up they go. A new buy channel opens up with the prices. Notice this. The candles trading up over the orange line. Very strong sign. Pull back to the signal line right here at 56. A bias accelerator appears within 4 candles here. So you got another good sign of a strong move up. You get long and up they go. Here goes the prices moving up higher into this level and peaking out. You can see on the indicator here, peaking out above the blue lines. And now you're looking for the market. Also, here's another sign of a peaking level here as it reaches over this magenta line. So if you had gotten long down here, let's say at 56, and you said, I'm going to hold this baby for a longer move, when you see it get extended up here, look at that, 74 is the top. The absolute high was 78, so you got out very close to the top. If you had followed these here, you can notice they go higher, 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 then when they turn lower, and then they come back to the blue line and then trade under the blue line. That's usually, this is not part of the exact system, but it's an indicator you can use as a gauge. When they come back under the blue line after peaking up at magenta or over blue, back under the blue line is usually where the market will start to break down on the reversal. Look at that. There they go. Well, in addition to that, you have this orange and red line forming a very wide fat channel here telling you a reversal is imminent. A new trade channel opens to the downside, no signal yet. Remember, what's the rule? That's right, the candle has to tap or trade through this orange line. However, a bias accelerator appears later after the pattern is formed. Now, they don't appear instantly on this candle. Market may be trading here, over here, but if you see it form, that's a sign that you're going to get an acceleration probably about 80 to 85% of the time. So you're short already based on seeing that, or you might have gotten short on one of these other taps. That's okay, especially with the red and red matching, and down they come. Huge move to the downside. You see that? That's because the Boomerang Day Trader indicators really, really work well. They're developed by me, a trader of over 23 years, and a year of research, not just throwing some indicators together. A lot of these indicator companies come out and they think they're big experts. Most of them don't even trade at all. They design indicators. Go figure that out. How can you design an indicator if you don't trade, if you don't go into the battle and know what it's like? Anyway, I'm just telling you this is developed by me, a trader with a long time experience and 12 years experience in the trading community, which is more than 95% of the people out there have even been in the industry. Most of them have not even been in this industry over 3 years, what to speak of 12. So I'm tooting my horn a little bit for a good reason. I'm warning you to protect you, that you want to buy a system from somebody who really, really trades and trades for a living like I do, and has developed these after a lot of research of real-time trading, not just throwing a bunch of indicators to make a slick-looking chart or a system package. Anyway, so here's a nice extended move to the downside. So where do we go from here? Again, these patterns are just reoccurring patterns on any chart. It doesn't matter what chart this is. It has absolutely no difference whether this is a Euro-dollar chart, an ES chart, a crude oil chart. It doesn't matter. The patterns are the same. As long as you've got the volume moving the market, you're going to see these patterns. So, same thing here. And what I want to point out to you, I'm going to just go over this real quick. This is just roll with me on this here. Now, again, this is an ES or a 6E chart, which is nice because it trades around the clock. It can show you what I mean. I want you to show you. I'm just going to show you how powerful the red line crossing over the orange line is. And just pay attention to that. Forget about all the other patterns for now. Look at this. Red crosses orange, prices move to the downside. Red crosses over orange just a little bit. It's a steep orange. They flounder. They trade back on the downside. Look at this. After a failure, red crossing over orange, back under orange. Look at that, a huge move to the downside and continuation. This is just to show you the bias reading. Pretend these are all just plain candles and all we see is the orange and the red line. Look at this. Red crosses over orange. Look at that move there. Red crosses over orange. Down they go. Red crosses over the orange to the upside. Generally bias the upside, but faltering. The faltering is another sign. These are just indicators you can use. Faltering, red crosses orange, huge move to the downside right at the crossover point. Look at that. Continuation move as red stays under orange. Continuation, more continuation. Orange tries to cross red, and the red candles are pressing on the downside as they cross. Red cross again, another downside move. Just a washout move here. Now, where does the next bias on the upside go? When the red crosses the orange line. Look at that. Just like clockwork. Red crosses orange, and up all these lower moves are pulled right back to the upside. Same thing here. Red crosses orange, down they go. Do you see how, practically speaking, this one indicator I built into Boomerang is worth the whole price of the system? If you just had this one red crossing over orange on your system, you'd know the bias of the market while you're trading. What to speak of all these taps in the signal lines, and the whole methodology I give you is very, very valuable. Red crossing over orange, look at this. Red and orange running parallel, choppy market, stand aside. Red crossing to the downside of orange here, look at that. Down they come, small move I know, but red crosses over orange again. Huge move to the upside. Look at the bias reading. I'm just trying to show you this here. Another attempt at crossing over, and while they're crossing over, they're still on the upside. So back up they go. Red crossing over the down. Now here's again another sign. If you see red crossing to the over orange, we do not fade or trade against that move unless we see the candles moving back up over the orange line, which is a sign to reverse. That's going to be a reversal signal. Pull back the signal line, and up they go. Red crosses over orange again, continuation higher. See how that works? And then you monitor the thickness of the channel between the red and the orange line. Look at how thick and fat. I call it fat because it looks like it has a belly there. It looks like a big piece of pizza. Anyway, the point is that thickens up and orange stays flat. We watch for a pullback, a short. Very simple way to read the market. And then what do? You go down and look at your bias gauges. Here's the thick prices. Already they're trading on the zero line here, on this side of the zero line, telling you the market's moving. So thick channel, fat channel here on the red and orange spread. Bias indicators moving on the other side of zero line. That market's going to reverse. Again, let's get our attention back on the red versus orange. My fault, sorry. Here's red versus under orange. Look at that. If you just use this one indicator, you could create a whole system out of it practically. I haven't done it yet because I'm just showing you it's for free. Look at the bias readings. Just stay on that side of the market until this channel between the red and the orange thickens up. If it stays in a flat parallel line, they're going to just keep going down. They try to climb back up here. Look at that, slight crossover, but already the red candles are trading under orange. That's a reversal sign. Hard, fast move, just based on that one indicator I gave you. In other words, red's crossing orange, but the candles are already trading back under orange. You get short, and it's a fast, fast move to the downside. So this is just something I wanted to show you. Now here's an interesting pattern. Red crosses orange, and the candles are pulling back up over orange, but notice how red stays on the same side. So when they reverse, now this trade could have been taken and you could have grabbed 44 to 50 where there was 8 ticks in there. It's a fast move, but that's not the point. I'm showing you red's holding under orange. As soon as that trade channel opened on the downside, you better have grabbed this tap really quick, because look at that, within 7:26, within 5 minutes, it made a move of about, let's see, move about 22 ticks, really fast, lightning speed. This is 6E. That's why I love 6E. But other contracts will show you the same pattern. Red crosses orange right here. Up they go. You with me? It's pretty amazing, isn't it? It's just one of the features. I'm just trying to show you how valuable and how important it is to keep your attention on the red and the orange line crossover while you're trading with Boomerang, using the other features to get on the right side of the market. So let me check my notes real quick here. I've gone over the volume meter with you. I've covered the rules that you can email me and get those rules even before you buy Boomerang. I want you to email me at mohan@Day Traders Action. Let me send you a copy of the simple rules, which is only, about a page and a half. You can print them out on your desk and memorize them and follow my video tutorial library, which is on my blog just under video tutorials. There's about 16 short 5-minute videos on there. You can see the rules. You can practically see everything working on Boomerang before you purchase. Then when you purchase it, what we're going to do is immediately we're going to send you your download, and our tech support department will get a hold of you to make sure you got everything configured right. We're going to be with you all the way on that. Then once you're in, you're already an expert. You've got the rules. You've been following the tutorials. The market's open. And then what I want you to do, though, is go back as soon as you get the download and go back over 10 charts and practice on the simulator, on Ninja, if you will. And all of a sudden now, here you're buying a system. There's no mystery. There's no confusion. You are already virtually an expert on how to trade with Boomerang. Now you own it, and now you're placing winning trades just like that. It's exciting. And I'm here to help you anytime you have any questions along the way. And I'll be doing more videos, tutorials regularly every week. And these webinars will be ongoing. We'll have some upcoming question and answer webinars and everything. So I covered most important things. One very important aspect is called choppy market conditions. Now, we just happen to roll into one here. Now, this is coming right in. This is again on 6E, but it gives a really good example. I'm going to switch back over to my pointer. Again, all you do is right-click on your chart and go to pointer. That takes the crosshairs out. Now look at this. The first signs, let me bring this back over here. This is right in the rules sheet. Rules for trading BCT or BDT, Boomerang Day Trader. Again, this was, I just haven't changed the name. It's same thing, Boomerang Currency Trader, Boomerang Day Trader, same thing. Avoid choppy markets by watching out for low volume readings on the volume meter. I already went over with that. If the volume meter is under that 200 to 300 level on 6E or the key levels on the other contracts, which you can find just by building the volume meter and look for the key volume areas. Mark it with a line and you'll know. Avoid choppy markets by not taking trades when you see a previous spike candle of 7 ticks or more in length before a new trade channel. Do you see? Use caution on tops formed after 3 waves or more in length, and expect choppiness after new trend forms. And that we already talked about that. If you get a long extended move, expect choppiness. That'll be your first hint. Hey, I'm long in this move. When it's over, I'm going to sit back and let the market chop around a little. I'm going to watch for 7-tick candles in length or more, and then watch out for those fat channels that are formed when you get what? 2 to 3 elongated 7-tick candles with a trade signal line getting tapped at the bottom of the fat channel. That's exactly, it's not what happened here, but you can see that happening in these patterns, and they occur once in a while. You just don't want to take those trades. Here's where this is a classic thing. Market made a huge extended move. So the first thing you tell yourself, whoa, be cautious on choppy moves. Okay, they trade up through the steep orange line. I mean, that is a steep orange line. They trade up through there, so you're going to grab the first pullback at the signal line here. It looks like it's around 83. Yeah, and they jump up to 96. But look at these whipsaw candles in here. You start seeing these. Now, you're in this buy trade. Don't worry, they're working in your favor at this point. When they go up, 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 cling, your automated ATM setup should have got you out with your 8 ticks. But that's telling you stand aside, especially when you get immediate counter 7-tick plus down candle. Then the thing reverses back up 7 ticks. Another one here, another whip. This is whipsaw, friends. Just stand aside. Don't let the emotions drag you into these trades. You don't have to trade the markets. Our rules, our simple rules are telling you, stand aside. The volume meter was probably very low at this time as well. These are just programs fighting each other. Programs run the markets nowadays, about 60% of the market. They're just fighting against each other. We want to get on the side when all the programs are long or short, and that's done with our trade channels and all our other tools. Look at this ridiculous neutral whipsaw candle, another one here. Just let it settle. Well, where do you get back in? I'll tell you exactly where you get back in. First of all, you look at the red line trading over the orange. Notice how they're both running parallel and everything's whipsawing. So you just wait. Now here's an up move. You look at the whipsaw channel, like the levels. Now here's a breakout of the whipsaw level, but don't trade it. Just leave it alone. Just wait. Now you see a pullback down into below the orange line again, a new trade channel opening up, and instant, very quickly, means right off of the signal line, matching red lines, bringing this into a downside move here. If you wanted to wait and miss this, that's even fine too. Just miss a trade. Don't worry about it. You're going to have 5 to 12 really good opportunities to trade every day. Don't worry about it. Just let the trade go by. No big deal. Now what do you immediately do? You start looking at the thickness of this channel, right? Looking for this spread, because look, there's a fast move down, creating a bubble here. You compare it with this fat channel here. Look at that. And you say, well, very good chances to move to the upside. Histograms are all moving up here. Things are turning green up here. A new channel's open. They tapped the orange line. One traded slightly through it. You could have taken this trade here. That would have been an authorized trade to buy at this level. Or just wait till they trade up through here, come back to the signal line, and up they go. Either way, it was a nice 8-tick trade. And now you're waiting for your next move. You see how that works? Just follow the rules that I'm showing on these webinars. If you already own Boomerang Trader, go ahead and review the rules on these 2 webinars here on the blog. Same thing here. Move down below the orange line, tap in the signal line, and down they go. So again, let me just quickly check my notes. I want to make sure I've covered everything. We talked about the trading hours, the basics of Boomerang, which it's pretty simple really. Patterns are where traders sometimes, it seems confusing because these prices are flying all over. Just get your mind up at a higher airplane kind of view of the chart and say, just follow the patterns. That's all you got to do, and they'll pan out. Now remember, 5 to 12 correct trade setups a day. If you just catch 2 correct trade setups for 8 ticks on just one contract, that's $100 a contract times 2, $200 a day, 5 days a week. That's $5,000 a month. Or that's $4,000 a month minus commission. So if you have 2 contracts, you're looking at about $8,000 a month minus commissions, just taking 2 trades when there's a whole bunch more all the rest of the day. So if you just get really, really good at following the market early in this session during our recommended hours, taking the right trades, you'll find some really good action going on here. I've already showed you how to avoid the choppy periods. This is an extremely low volume period on the 6E contract. Not even really relevant because the 6E doesn't start going usually till after about this time period. That's when the volume comes in. Same thing here. Red crosses orange. Prices start moving up. You read the orange line and the red constantly. You're looking at that and determining, is it channeling higher, as in this case? Channeling. Oh, now it's widening out. Notice that orange is steep and this channel is getting fat. It's telling you watch for choppiness as you come to the end of this extended move, which is exactly what we got. The channel thinned out. Now, that doesn't necessarily mean they're going to reverse to the downside. Not in all cases. Sometimes you got to follow the rules and see what happens. Well, all of a sudden, here they go to the upside again, this is kind of typical on 6E. They'll make these extended moves and they'll keep pushing them. A lot of central bank action involved in that. So the point is, like say you saw this trade through the orange line here and you took this pullback signal line. Yeah, you got stopped out here. Well, it wasn't a very big stop. if it was a regular stop, you know, that's going to happen once in a while. You would have known not to take another trade, because this is like a 5th level trade, but just be patient and wait for the next one. Bias accelerator alert. Now this didn't have a bias accelerator alert either, so yes, you're trading based on it trading through the orange line, but you know, it's maybe a little riskier trade, and it proved to be just that. Here we have a bias accelerator alert showing up, so if you took any of these trade taps here, you had a nice trade and made back your loss in that other trade. No big deal. Look at this. Red, here's a real powerful signal for reversal. The red line crosses the orange, but immediately the candles are back up over the orange line again. That's a reversal sign. Here they go. All your signals are there, your new trade channel, just get long. High confidence trade. Refusal to honor the crossover, the red or the orange, means take the other side. Blasted them higher again. Now you're wondering, should I go short? Well, you have a bias accelerator, you have a new trade channel, pull back to the signal line here, and a fast move to the downside, creating a fat channel. More choppiness because, number one, this is Pacific Standard Time, 8:30, which is 11:30 Eastern Standard Time. That's when the 6E closes. You can practically bet on a choppy market from 11:30 to 12 o'clock because all the European markets are closing and everything's kind of just chopping around and stabilizing, maybe up for longer. That's why we generally don't recommend trading the 6E after 8:30, 11:30 Eastern Standard Time. Generally, you're better off just forgetting it and trading it during those early hours, as we recommend it, from 8 o'clock to 2 o'clock is better. But you know, any time after this 8:30, it's a little bit shaky. Anyway, so this is a picture of what it looks like, and I've covered just about all the rules. One thing I want to remind you is that on our blog we have an important aspect of trading which cannot be avoided, and it's called Trader's Mindset. If you go to my blog at boomerangtrader.com, look under references, and then look for Trader's Mindset, you'll see there a book I recommend by Mark Douglas. And I also have a video I made there. Don't miss my video. I worked hard on making that for you. It's shot in the jungles of Kauai, and it has my magic 7 internal and external affirmations. If you say these affirmations every day, it will improve your trading. I guarantee that it will improve your trading. It helps you to develop a mindset. Listen to the beautiful music I put on there while the helicopter soars through the unreachable by hiking jungles of Kauai. They're so deep in the jungle you can't even get in there anyway by helicopter. Anyway, watch that video and order Mark Douglas's book, Trading in the Zone. Mark and I did a seminar back in 2004 as a live seminar in Boca Raton, Florida. We had over 320 traders fly in from around the globe. Over a dozen floor traders showed up. And Mark, I was a 2-day seminar, which I mostly handled, but Mark did about 3 hours of it. It was incredible. People just love his work. If you just get his latest book, Trading in the Zone, and study that, mark it up with a yellow pen, take a lot of notes, study it like you study these boomerang charts, you will be pleasantly surprised. Those two elements, the Boomerang Day Trader, the methods I've shown you today, along with Mark Douglas' book, you'll be quite happy. It'll really round out your trading, make you a successful trader. So again, I just wanted to mention that we have live tutorials you can take with Matt, my partner, and you've got Boomerang is $11.95. Immediately after you order it, just go to our site at boomerangtrader.com or my daytradersaction.com site. Order it there on PayPal. You can use any credit you want, even if you're not a PayPal member. Just check in as a guest. Use any credit card you have. I'll send you the download as soon as I see your order, and we'll get our tech support on it, and we'll get you all hooked up. It'll be very easy, simple instructions, and get you trading. You'll already be an expert because you know about this, but I will continue to support you with ongoing email consultation. You can email me anytime, and we'll have these weekly tutorials that I put out, video tutorials, and ongoing webinars. So thank you very much for joining with us today. I hope this explains most of your questions on the methodology and the basics of Boomerang. The rest is just following the repeating patterns and making the money on the trades. Thanks again very much for joining with us.